Tuesday, June 27th, market analysis, Stan Ehrlich. Good morning, 9:55 California time, middle of the trading day. And I always start out with the indexes, Spider, DIA, QQQ, and sometimes the Russell 2000 when it's relevant. Then I go to futures, 21 different futures markets, the majors, so to speak. S&P 500 is rallying this morning fairly nicely, up 375, near the high of the day at the moment, and above Monday's high yesterday and last Friday's high as well. But I'm not overly impressed with this rally. I think it's a normal rally in a bear downside correction. It is not a bear market. It is not even a bear trend. It's a correction, a bearish correction, and a bull market. And I'm still now for the last week plus expecting a move down to 423 for the Spider. It closes a gap. It'll be at the bottom of a support area and other support reasons as well. So that's my downside objective. And there's a chance it could go a little further, but the downside objective is cast in stone. Whether it works or not is a different story. And the low that we made yesterday was not oversold, so I don't have any RSI help at the moment. Very, very neutral, 49 level, right around 50. Anything from 40 to 60, in my opinion, is pretty much useless RSI information. I need stuff to get down below 30, and my oversold condition is 25. And I need stuff to get over 70 at a minimum to be interested, and 75 is my overbought condition. That's when I start getting bullish or bearish engulfing like the bottom of the market on October 13th. And for the QQQ, for example, and the DIA, I believe both the exact high day of the bull market after COVID and before the bear market of 2022, the top and bottom days to the exact date this system picked. Enough said. A little rally, no big deal so far. Don't care. I think it's an opportunity for a short-term short sale, maybe lasting a few days to a week. This gives hope to the bulls at the moment, and rightly so. It's a typical way of a bull market to shake out longs and shorts now and then. Next chart is DIA, and I have basically the same kind of commentary for all three, and I'll talk about the Russell in a moment, the next three. So rally on the DIA, new highs for two previous days, and it will be the slightly higher closing price if we stay here. But I do want to point out that on the 1 minute charts, which obviously I use for very, very fine-tuned analysis, we did get up to an extremely high RSI a few minutes ago on the RSI above 80, like it looks like 84. And we're already starting to turn down a little bit. So we could have seen the high of the day just now. Same thing goes to the DIA. It's going to be slightly different RSI readings on the rally high. And the QQQs have also started to bend over a little bit and turn down. So I'm thinking the same thing. And here's the Russell 2000 down below in the middle, and I'll give you a full screen for the daily data. Nothing impressive about this. I can't come to any particular conclusion. And the low, by the way, today is higher than yesterday's low by a very small few ticks. So there's no engulfing. I got no chart price action or chart formation that leads me to believe that this rally is going to go any place but fizzle out real quick, and it just may have, and challenge the lows, make new lows, and close gaps. Even in the QQQs, there is a gap to close, but it seems to be a little further away than I'd like, down to 333. And we're at 362.5, almost 363. So 30 points seems like a pretty large chunk. When only a little bit lower in the DIA, for example, it's going to close its gap, and that only needs to come down to 333, and we're at 338. Also, about a 10, 11, 12 point dip now on the Spider to close its gap. Now, the Russell does not have a gap to close, and all it's doing is bouncing a little bit, and it's got a little bit of resistance above, and it's got that gap to close at 176.5. So enough said about the indexes. I'm still very short term, next few days, this week, looking for a move down to close some gaps. Futures, yay. And I was a futures broker 35 years, 1772 until I forgot. Well, just add 35 basically. And I had my own futures brokerage firm and a little IB, everything all the way up to a hedge fund manager. So here we go. Now, the E-mini is an index as well as a futures contract. Excuse me. So all that applies to the commentary on the spider pretty much applies to the SES E-mini, but it has different trading hours, so it has different signals sometimes. The formations are almost always about the same. We got a gigantic bullish engulfing at the bottom of the bear market. At the beginning of this bull market, you can't get more accurate on a daily basis. Next chart. Bond market held a bull trend line extremely well, unusually well, having many different touches on it in a couple of months. Looked like it was about to break a little resistance yesterday, and today we're pulling back a little. I think we're about to push above 129, 130 into this resistance trading range area that essentially started back in November, December. Once we get, and I do believe we're going to get, above the highs of 134, 135 closing price, we should start a very long-term bull trend. That means lower rates on interest rates, and I think it's going to be before the end of the year. I am, this commentary-wise, stretching out the time frame a bit more. I've been used to saying a month or two, but I'm going to give it a little more time. Next, 10-year notes are about the same. Didn't test its trend line very accurately, but came down close to it, and not really popping back up quite as nicely toward the highs of the last few weeks like the bonds, but I have the same basic opinion on the 10-year notes. Now, if things were to turn around and the 10-year notes would start to make lower lows, watch the trend line to see if it holds, and then you've got the support area, which is more important to me, at 11 or so to hold 111, and we'll see if that holds. Next chart, and I'm bullish on interest rate futures intermediate to long term. Short term, it's a little bit of a problem to figure out at the moment. Energies, crude oil, about to make, I think it's going to today or tomorrow or the next day, new lows for a month and a half, and that is going to come very close to a major bearish long-term breakout after we got a sell signal at the top of the market to the exact day, June 15th. Enough said. And there's some bad signals along the line, but we have a tight stop. We never take a large loss. We always use money management. Explanation point, underlined, italicized, fancy fonts, and a nice color. Period. Okay. Learned that many years ago. Don't let a loser get worse by procrastinating. Next chart is heating oil. Bumped against a little resistance, starting to come down some. It's got a little bit further to go than crude to break out to the downside, but the same situation applies. If we start getting below 213, 212, 211, it's going to be a huge major bearish breakdown and a long-term move to the downside. And our signals got this very important top, almost the highest high for I don't know how long, and the highest high on June 17th. Some fantastic signals in the heating oil. Yeah, but I'm going to say past performance is not indicative of future results, and hypothetical returns have some inherent limitations, meaning just because it did what it did before doesn't mean it's going to do it again. Next chart, natural gas. I'm sorry, all the energies look basically the same. Bear trends, trying to hold support, look like it's going to break support. Now, we had a sell signal that didn't work about a week and a half ago on the heating oil, but I do mention periodically that we have clustering happen sometimes. We may see 2, 3, or even 4, I don't think I've ever seen more than that, in 1 month, sell signals, or buy signals. So they cluster during the topping out or bottoming out process. Not unusual. Maybe we're going to see this happen again. It's only been 5-6 days since the signal. Unfortunately, it wasn't, the high. Now, remember, we have ER1 that gets short the day it turns red or green, and that probably produced a very small profit. But ER3 looks for retracement and goes into the trade in the red, new short for red, new long for green dot. This is a bearish signal, so it's a red dot. We sold short, a little loss on the close. We're still short, a little larger loss on the close, and then we got stopped out on the third day in the trade. Ouch, but not bad. Live to make another trade. Next, gold. Wow. We got the bottom of the market back in February, along with platinum and silver, all three of them. And we got this high, we got that low, and I'm only pointing out the lowest low and the highest high for weeks or more. Got that low, great. That one didn't work, that one didn't work, not so great. This one looks like it might have punched us out of the trade. Today's low is 19206. 1920.6, and our stop was 1919.4. So no, it did not stomp us out. Came damn close. This is when you're grinding your teeth and being worried about it, but it's not out. It's black and white. You're either stopped out or you're not. So we'll see what happens next. Next chart is silver. Wow. The low on March 10th. Bingo. The high of a double top, and we didn't know it at the time, April 14th, the second of the double top, and I started screaming bloody top on May 5th. And a complimentary another new short sale signal 3 days later, and down we go, crash. Great performance on my signals, ER signals. Minimum downside objective was reached. Oh no, we got a bullish engulfing smack dab at the bottom of the rally. I told you at the time. Now, up to date, 2 days ago, 3 days ago, oversold. We're bouncing a little bit, no big deal. Trend is down at the moment. I'm looking for a move down to test 20 about. Next chart. Platinum, oversold, trying to bounce, not very successfully last couple days. It just might have a little bit more of a rally. I think this is a bad place to go short. We did bounce off of support back in end of February. So I think a rally is likely. It's a little hard to figure out. Maybe up to about, I think it's going to be 982. Not too far. Have several days a week and then down again. Next, copper. Already had its rally, got overbought, starting to head down. Talked about that the last couple of days. I think it's going to challenge the lows at 3.5 and probably make lower lows. I want to point out that we got overbought and stayed that way through a significant rally. I know it gets frustrating not to go long when it, in retrospect, 2020 hindsight, did make a pretty good move up after being overbought. Usually, like here, we got overbought and it was almost a high day. The next day it turned down. 2 or 3 days oversold, we turned up. 2 days oversold, we turned up. 2 days overbought, we turned down. So a lot of the time, most of it, it only takes 1 or 2 or 3 or 4 days to be overbought, oversold before the prices flip. Next chart. We start grains, soybeans, overbought for several days. I keep telling you, watch out, don't go long. I'm looking for a sell signal. I don't think I'm going to get one out of today's activity, but at least it's starting to slip a fairly large amount. I'm looking for a downside retracement, probably to 1440-ish. I don't have anything great in mind at the moment. All right, next is soybean oil. Oh, hey, today we got a bearish engulfing ER sell signal, barely. I'm telling you, we're just barely lower on the day. As a result of that, we have a higher high, lower low in overbought conditions within the allotted number of days backward, and a double top Here we go. Double top, bearish engulfing in a second high. If it closes lower than yesterday's close, period. If it closes equal to or higher, then it's not a bearish reversal anymore, and all bets are changed. So, assuming it's going to close below the previous close, again, it's extremely close. It's not very far away. I think this stands a chance of coming all the way down to at least 53, maybe even more. Next chart is meal, soybean meal, got overbought, retracement, downside correction in progress. Trend is very possibly turning bearish long-term. It probably will be defined as a long-term bear trend if you get below 385 on a closing basis. Right now, we need to, if you're bullish for some reason, and we bounced off a broad area of support with this double bottom, we need to maintain these levels and then start closing above 439.40. That would cause, let's call it 442. Sorry. That would cause me to slightly turn bullish again. I didn't get any signals at the bottom, but that is a minor small double top. It is double bottom, sorry. It already worked correctly because you measure the distance from the lowest lows average to the highest high between the two lows. What is that? A distance of whatever. And then you go to the highest high between the two lows and you measure straight up to that same amount. And it's approximately something in the low 430s, but it got there already. So that pattern worked. It was small, no big deal, but still afforded, a technician some edge. Back to support right now. I'm going to stop right there. Corn got overbought, came back, now breaking below an old trend line, which is probably going to be erased. I'll leave it there for a little while. And in an area of major support, I don't know. I'm not quite sure about this. It could dip a little bit more. I don't have any specific opinion or exact objectives in mind at the moment. But the major trend, intermediate to long term, is neutral to bearish. Next, wheat stopped on a rally, smack dab at resistance in overbought condition. That's a great combination, and it worked just great. And that was yesterday. So almost a bearish engulfing would have given us a red sell signal, but not quite. And we dropped off sharply today. So it was close to an official signal. So I'm not surprised this happened. And I talked about it likely to be happening. It's a long-term bear market. I'm looking for a challenge to the lows for the trend and maybe new lows. Next is going to be live cattle. We got the top of the market to the exact day. And then we got about a week later a complimentary new short sell signal. Now this rally is the best one we've seen since the last sell signal, but we had plenty of time to take a profit, and our strategy more likely than not got out on the 22nd and took profits because of the way the market was moving. And we do move our trailing stop above the market with a bearish position relatively quickly, probably more quickly than most. So right now I'm still bearish because of the signals. I'm probably not in a trade though, and I'm looking for a little bit lower levels, probably down to about 164. Next chart is lean hogs, and we got the highest current quote since our sell signal, which worked on the first day very nicely. Plenty of proper opportunity for a scalp trade right there. And even on ER1, which got short at 91.8, on that day, the first day for a scalping trade, it was a great short sale scalp. So even AR3 the next day, 2 days ago, provided the same thing. And we're not, for position traders, doing super great. A little bit of a scratch trade or a small loss. So I need to turn down right away and close below today's lows. That would make me happy. How much lower? Probably all the way down to 73. And the bigger picture is obviously a longer term bear trend overall. Next, OJ, not real sure. If I don't have something decent to say, shut the hell up. So next chart, cocoa. I don't feel comfortable about going long here. And if I was long, I'd be looking to raise my stops and be very leery of getting into overbought conditions again. Have to be bullish. The trend is very strong, but we're not overbought. So it's probably got a little bit of legs left on the upside to make new highs to a modest degree, short term, bullish. Next, cotton, boring, but 2 days of oversold condition now. A very slow moving market, but it's at support and it's oversold. So I have to say it's going to rally back up to maybe 84 in the next week or two. But look at the way it's been acting until we get a major breakout to the upside or downside. And I favor the downside because the longer term trend is down. And you know what they say, the trend is your friend, which is true. If you don't know what to do, trade with the trend, but or don't trade at all. Next is sugar the sweet. I told you yesterday that we had a downside breakout on a minor double top. Some people might call it a triple top. That's okay. They're basically the same formation anyway. All the other measurements are basically the same. And today we're already halfway down to the minimum, which wasn't very big to begin with, downside objective. And that is 21.8. But that's not in the middle of, that's in the middle of nowhere. The real downside support area is down to 20 or even lower. So I don't think it's going to stop at the downside objective of 22 or 21.8. I think it's going to come down further to 20 and maybe to 18 in this broad support area. And that is it, ladies and gentlemen. We're back to the E-mini. You have a great day tomorrow. Bye-bye.